Hi, folks. Dan Burt here with the Daily Scan. So, after 3 days of a nice rally, looks like we're crashing and burning now. Very interesting that it happens on Wednesday, right after Monday and Tuesday after the options expiration. Max Payne event of last week. I said last week Max Payne would have the market going up and probably would carry over into Monday or Tuesday, and that's exactly what happened. So now we're heading back down again. How far will it go, though? And is this the beginning of a longer trend, or is it just a temporary thing? Well, we're going to find out here. As always, I am not a financial advisor, so this is for educational purposes only. You need to take responsibility for your own trades. Nothing that I say should imply that I'm recommending to buy or sell anything. So let's take a look at what happened today on March 26th. First, we'll go to the home page where we see the market bias ticked down slightly today. As I mentioned the last few days, there's not a lot more that it can go down. It certainly could, but everything is already pretty bearish. So even with a bad day like today, it only went down a little bit. However, you'll see here there's lots of bear signals, only one bull, which was crude oil, the only one that ticked higher in the short-term column. And we got a utilities sector went bearish in the medium-term column. And you can see over here that we now have yellow lights across the board with the red light still in the long term. And you can see the short-term just ticked down slightly today. So we'll see if that continues, or maybe we can turn it around. However, I don't think that's going to happen. So let's take a look and see what these things look like. First, I want to show you in the VIX right here. The VIX, let me make this a little bit bigger. So you can see the VIX is still in that neutral zone. So 1833 is where it ended, still below 20. But anything really above 17 means, and especially if it's a bear market, it will stay above the 17 area if we continue to go through a bear market rather than just a pullback or a correction. Now, I watched a video by Tom Bowley today, and he's still convinced that it's only a correction, that it's not going to be like a cyclical bear market like we had in 22. However, I am not convinced. I think that we may still have the chance of a bear market like we did in 22. However, the VIX didn't really tick up significantly today, but it did go up a little bit. So that's indicating more fear in the marketplace. One thing that I also added up here, we'll look at the 10-minute charts, but I also added a 10-minute chart for sustainability. So the sustainability ratios are here, but I wanted to look at it on a much closer view. So we'll take a look at these today. So here's today's movement. The vertical line is Monday. Monday's open is the horizontal blue line. The previous Monday's open is down here, the red line. So it's good that we are going higher. But you can see what happened today. We sold off most of the day. We started to come back right towards the end of the day a little bit. And we'll see if that will continue tomorrow or if we continue down. Technology versus the S&P. So these are all relative charts here. So technology, how does it perform versus the S&P? And then financials versus the S&P. Discretionary held up pretty well. Financials held up fairly well. And communication services did as well. So those are the aggressive sectors, and so did industrials. So technology really was the biggest one, but that's 33% of the S&P. So that's the one that was underperforming the S&P today. We'll take a look now at the defensive sectors and see how they did. And as you can see, defensive was healthcare, just looking at today, was up slightly. Staples was way up. Energy was flat. Utilities were up. Materials were up. So in comparing the two of these between aggressive and defensive, it looks like defensive is starting to make a move higher. Now let's take a look at the sustainability. And this right here is really interesting because this shows you growth versus value. So if we have an uptrend, we want growth to be outperforming value. And it had been for a little while through here. However, not today. Today it went down significantly. Discretionary versus staples went down also, but not as steeply, but still it went down. Technology versus the S&P, again, you can see that was the big loser. Technology versus the S&P definitely underperformed, and it's below the zero line. The NASDAQ versus the S&P, these are cap weighted. It was a little slightly lower. It went down from the beginning and then stayed down there. And then the equal weight also did the same thing, went down and just went sideways from there. So all of this is not a good look. You can see what's happened today. We're still not basically back to last Monday's open. So technically we're still okay, but this big gap right here is what I'm a little bit worried about. So let's take a look at the individual indexes. And one thing I did over here, because somebody asked me to look at the Russell 2000 when I do the daily update. And so I just added it to the front page. So anyone that wants to come to the homepage of breakpointtrading.net, there's no subscription needed for this. You can now see the Russell on here as well. So let's first look at the S&P. And the S&P, as you can see, had a went down today. Now, you might be able to notice it here, but we had a gap right here, a gap up. So this is Wednesday, Tuesday, and Monday. So we gapped up on Monday. We gave back everything for this week. So we were basically back to where we started the week. We're still above last week's open, but we gave everything back for this week. Now, here's the thing to watch for tomorrow. If we gap down tomorrow, and we have another open gap over here on the right-hand side, this is what's going to create what's called an island reversal. So it basically leaves these 3 days just sitting out here all by themselves, like on an island. And if it gaps down, that's an island reversal. And that is a very bearish pattern. So we don't want to see that. We'll see what happens tomorrow. And also you notice the support line across here. This is where it came down to in January, and we came right back up to it. In fact, yesterday I said there was a spinning top, indecision, and many times a reversal. And that is what happened today. We had a reversal candle today. So something we have to keep watching. It's now below the 21, below the 200 as well. And momentum is still trying to move higher. So this, and actually the volume, even though it was higher than yesterday, it was still below average. So we may still have a chance, but it doesn't look too good today. Let's look at the NASDAQ 100, see what it looks like. Should be similar, even bigger candle. So it gave back more than the week's gains. So the NASDAQ definitely is the worst looking one. Again, if it gaps down, then it will leave a reversal, island reversal as well. So we'll have to watch that tomorrow. We'll take a look at the Russell since I just added this on here. And the Russell, also same thing, gave back everything for the week and has not filled the gap. But if that one gaps down, that will be an island reversal too. So that's not what we want to see. If that does happen, I think that we are going to lower lows below the previous low. When I listened to Tom Bowley today, he was hopeful that it was going to go down to this support area and then bounce and start to go back up. But I am not as confident. Now, the one good thing is if it does get down to this area, that is a very extreme level. So it's in the 3x Keltner area. So that is an area where it could actually bounce back up again. But it's going to be very volatile. It's very difficult trading right now. And I'll show you something in a minute that will bring that home. So that's the way these things look today. If we go to the portfolios page, and I'll show you what I mean. So yesterday over here on the short term, we had an up signal. We had a bullish signal or go long signal. But that didn't last very long, only lasted 2 days. So it reversed today. It now has a go to cash signal. Even though the early warning is still bullish, still green, still go to cash today was only a minus 1% loss. So that's absolutely what you want if things don't work out the way that you expect, and nobody knows which way the market's going to go. But if it doesn't work out the way you expect, then you get out right away with a very small loss. We still have a 42% gain going back to November 3rd of 2023 on this short-term trading one. So that's okay, but we had a minus 1% loss today. If we look at the daily chart, you'll see what it looks like. So one above the 21 right there, and today it went back below the 21. So it's still blue though, so it has not turned red yet, but still moving down. And again, that will be an island reversal if it gaps lower tomorrow. And we don't know if that's going to happen yet, so we'll have to keep an eye on that. By the way, that candle is blue, so this should be a similar to the one right above it, the early warning, meaning it's moving from a green to a blue. That's what this upper one, the longer term one, looks like. If we look at the long term one, you can see it's blue right there, right in the neutral zone between the 50 and the 21. This was our go to cash signal right here. So we're not doing anything right now in the long term portfolio. And you notice that the histogram is about ready to cross down below zero, which really has not happened since way back here. Now, way back here, we had a very similar pattern. Went down right just about below zero and then bounced back. This is a weekly chart, so we have to wait till Friday to see how this completes. But bounced back here very quickly. Even though it went below it at the beginning of the week, by the end of the week, it had gone all the way back above the 21 and never went below zero down here. So we'll see if that happens again. If we do get a reversal and we go back up, then we might be getting back in. But I actually, everything else looks pretty similar too. So this was just about ready to cross zero right there, and it's just about ready to cross right there. So we're not giving up hope yet, but this really needs to recover and get back up there. I personally don't think it's going to happen, but who knows? We'll just follow the market. The most important thing is the price. No matter what you hear on the news, most important thing is the price. What is the price doing? So it is trying to move higher, but it's just neutral today. All right, so that's what's happening over here. If we look at the TQQ versus SQQ, so you can see the long is on the top and the short is on the bottom. So you see the long was trying to make it up there, even though we had an up signal, a long signal on the VTI, the total market. Let me go back and show you that. This is really important because just because this says long, that does not mean that you should jump back in. You should weigh all of the information. So this was long yesterday, and that's because the total market had gone above the 21 right there. So that was your indication to start looking at everything else, the weight of all of the information, and decide whether to go long or not. But if you looked at the TQQ, which is the triple leverage long, the one that you likely would want to get into if you wanted to be long, it did not go above the 21 over here. So even though the overall signal was given, that's not the thing you trade. You don't trade the VTI. You don't trade this one over here. This is just the signal of what's happening with the market. Then you make a decision of what you want to trade. Decide whether you want a 1x, 2x, or a 3x, long or short. But just because this goes long does not mean you jump into these yet. So, and this is a perfect example right here where the TQQ never did go above the 21. If it had today, then that might have been the time to go long, but today it went the opposite direction. So is it time to get into the SQQ? It might be soon. So like I said before, I was expecting the market to have a rally. I thought it would rally more than it has, but I was expecting the rally, and then I was expecting it to roll over and actually make a new low down here. This is not really confirmed yet. I'd like to see this turn into a green bar before that, but it's certainly worth watching and maybe getting ready to go short on some of these. Other ways you can go short is on the charts page at the bottom in the left is all of the short ETFs. So if you wanted to do semiconductors, for instance, this is the SOXS, the short semiconductors. You can see they never got above the 21 there either, so that they're rolling over, and this one is starting to move higher. So especially if it takes out this previous low right there, this is one that you could get in on the short side and make some money. So all of these things are right on the website. They're available for anybody that wants to see them. All right, so I want to try to keep it brief today because I know I went long yesterday, and sorry about that. So the last thing I want to do is take a look at the daily scan. Actually, we'll look at the dashboard real quick. And equities, you can see sold off, came back at the end of the day. The best performer was actually the Dow was the best performer. The VIX came up slightly. Bonds, 20-year bonds actually went down a little bit. 10-year came up a little bit. Commodities, gold went down. There's gold, just kind of going sideways right there. Oil actually had a big day too. Oil came up. And then crypto, of course, Bitcoin right there, pulled back, came back up right to its right near the open. So it tried to recover at the end of the day. But that's what Bitcoin looks like. The sectors, I mean, this is what really tells the story. Staples and utilities, the two most defensive sectors, were the two best performers. And all three of the aggressive sectors are at the bottom. So that tells you the whole story for today. And I've got a few more that that actually reported. So Paychex reported. It looks like it's some indecision, but it looks like they had a good report. And Cintas Corporation went way up there and pulled all the way back. So that is a failed breakout. If I look at the chart on this, that's a failed breakout right there. So try to break out of this resistance. Looks like they had a good earnings report, but came all the way back again. That is not a good look. That is not only a shooting star, but it's actually a gravestone doji. So it probably is going to continue to go down tomorrow. This might be a clue for the rest of the market as well. But anyway, those are the ones that reported today. Micron reported last week and had not been doing well, and they continued to go down today. So Micron, again, true to form, is heading back down to the bottom of this channel, down here around 85 to 90. Probably we'll get down here to 85, somewhere in that area, and then go back up to the 200 again. So this is a trader's dream right here. You can trade it up and down both ways, short and long. Okay, and industry groups, brewers, distillers, and vintners. Everybody's drinking, I guess, because the market is crashing. Anything else of interest over here? Food retailer, soft drinks. These are all, you can see XLP is the staples. 1, 2, 3, 4, 5, 6, 7. Tobacco. So everybody's drinking and smoking right now. So just about almost everything except for one aggressive sector in the top 10 over here. And these are our top 10 combined list. Paychex is on it. Noodles actually went up slightly today. LI Auto, that's a Chinese EV. What else? Yum Brands, McDonald's had a good day. Yum was up there. These are also in the staples. Coca-Cola, it's a staple. It started moving up. Southern Company. Let's look at and Cisco is actually here. Cisco actually had a good day. It's interesting. CLS continuing to go down. HIMS dropping as well. Root, which was in the top 3 of the top 10s. Now it's at the bottom. So it's starting to drop. What else? Fubo, Robinhood coming down, SoundHound coming down, Spotify, showed you that before. All these don't look too good at all. Go one more down, ASTS starting to fall. All right, so Broadcom right at support. So none of that looks good. So finally, the last thing is I'll look at the daily scan. And this is a scan where I'm looking for stocks that are in, this is a bearish reversal for the Keltner channel. So I'm looking for something that's up here in the 3X area. Actually, this is a candle reversal. So this is one that's looking for a candle that is an engulfing candle like this. So it completely engulfs the previous day, or a shooting star. And in this case for GM, that's an engulfing candle. So if anybody's looking for shorts, these are potential shorts. GE is the other one, GE Aerospace, same thing, gave back 2 days worth right there. And it might continue down. Now it's outperforming its peers and outperforming the S&P. So it's a strong stock. So if it does continue going down, it looks like a double top right there. It may not continue for very long. And then let's take a look at the 21 crossing the 5, or actually the 5 crossing the 21 to the downside, optionable stocks. So this is a bearish scan. And here's what we have. Some of these were on there yesterday. Alibaba is continuing to go lower. So this one there, it's got a squeeze over here on the daily. Looks like it's firing to the downside. So Alibaba might be heading down. Bristol Myers we saw yesterday. Here's Clean Energy. Clean Energy, this is an ETF. So it's starting to head lower as well. Lucid, another electronic vehicle stock. It's trying to make a recovery. Looks similar to the NASDAQ. So it's rolling over. Lemonade, it's an insurance company, just going sideways, basically. Big, huge monster squeeze over here on the daily chart. It's kind of surprised it doesn't have a weekly squeeze, but monster squeeze on the daily chart over here. Palo Alto Networks, squeeze on that one too. So it might be heading lower. Solar Edge might just be starting a downtrend. Spotify we talked about before. Big red candle today. Spotify, that's a lower high. So definition of a downtrend for Spotify. So this one actually might be a good short. It's $600, so you could play it with options, of course. And SoFi Technologies, and this one is also starting to head lower. So not a good day today. You can see on the weekly, the week hasn't finished yet, but it does have a shooting star candle on the weekly. So not a good day today. The whole market looks like it's rolling over and maybe heading back lower. So keep an eye out. Be safe. I mentioned before that this is what might happen. I thought it might have a little bit more upside left in it, but doesn't appear that it does. So be careful. It's hard to short in a secular bull market, so be really sure before you jump into the short side. I would say maybe tomorrow might tell us that. If we get that reversal, island reversal pattern, in other words, a gap down tomorrow, and it does not come back to fill the gap, then that I think will be confirmation that we're heading much lower. So thanks for watching. Please like and subscribe. Let me know what you think. Tell me if there's anything you'd like for me to look at. Be happy to do that. And I'll talk to you again tomorrow. Take care.